Your bank has been charging you fees it never told you about. Your digital lender has been threatening people in your contact list. And until last month, technically, none of that was your regulator's explicit problem. That just changed. In this video, I'm going to break down Kenya's new financial consumer protection framework, what it actually says, what rights you now have, and the exact steps you should take in the next 30 days to protect yourself. By the end, you'll know exactly what to say the next time a bank, insurer, or digital lender tries to play you. Now, let me take you back to 2022. A friend of mine, I'll call her Wanjiru, took a mobile loan, 20,000 bob. Emergency situation, you know how it is. She paid it back on time. But 3 weeks later, she started getting calls, not to her number, to her mom, her pastor, her former employer, all asking about a debt she had already paid. You see, the app had scraped her contact list. And when she tried to complain, the customer service line rang out. There was no email, there was no branch, there was nothing. And she's not the only one. And if you've used a digital lending app in Kenya between 2020 and 2024, drop a 1 in the comments if something like that has happened to you or someone you know. I want to see the number. And here is what that experience taught me. The system was always designed to protect the FSP, not the consumer. And until now, something just shifted, and most Kenyans have no idea. Kenya's financial regulators, Central Bank of Kenya, Capital Markets Authority, Insurance Regulatory Authority, all of them just jointly published a framework that sets 6 binding principles every financial services provider, or FSP, must follow. And let me break them down in plain English. 1. Fair treatment. They cannot discriminate, mislead, or use aggressive tactics on you. 2. They must tell you everything. Clear fees, real interest rates upfront. 3. The product must actually fit your situation. They can't sell you something unsuitable for your need. 4. Your money must be protected from fraud and scams. 5. Complaints must be handled fairly. You get a reference number, you get a timeline. 6. Your data is yours. They cannot sell it, lose it, or use it against you. 6 things a regulator is now responsible for enforcing. That is a lot. This is the one I need you to screenshot and send to every group chat that you're in. Section 2.3.11 of this framework explicitly says a lender cannot access or use your phone contacts to contact third parties about your debt. They cannot shame you on social media, WhatsApp, or in public spaces. They cannot contact your employer, church, or family without legal permission. And they cannot make threats of violence or reputational harm. And I know what you're thinking. Mumo, they've been doing that for years. Yes, they have. And here's an uncomfortable truth confirmation for you. They did it because it worked. It worked because you didn't know it was illegal. It worked because there was no framework that explicitly named it as a violation. Now there is. And if a lender contacts your family, your contacts, or shames you online, that is now explicitly prohibited conduct. Screenshot everything and file a complaint with Central Bank of Kenya, CBK. I want you to comment illegal if a lender ever used your contacts or shamed you publicly. You are violated. Now you have the language for it. You've never heard of a key facts statement. I know most Kenyans have not. But starting now, every financial services provider, whether it's a bank, insurer, SACCO, digital lender, must give you one before you sign anything. It's a standardized, plain language document that breaks down the real cost of the product, all the fees, your right to exit, and how to complain. I want you to think about this. How many contracts have you signed in your life? Loan documents, insurance forms, SACCO membership forms, without reading a single line. Hands up. I know, mine is raised too as well. And we signed because we trusted the agent. We signed because it was a 27-page document and we had 10 minutes. We signed because the font was size 8 and clearly. So the key statement is the antidote. It's one page, plain language, key information, and so you need to demand it. And if they cannot give you one, that itself is a violation worth reporting. And if you're watching this and thinking, I wish someone had told me this before I signed that loan, you're exactly who this video is for. Go ahead and like it so that many more people can find it. Financial literacy in Kenya changes one share at a time. And comment right now, which of these three hit you the hardest? Is it the debt collection one, the KFS one, or the 6 rights? Tell me below. Now, here are 2 more rights that will save you actual money. First is the cooling off period. And once this is implemented, you will have a prescribed number of days after signing a financial product to cancel it. No penalty, no questions asked. Think of it as a return policy for financial products. This matters most for insurance and credit products that you're pressured into signing at a bank counter. The second is early repayment. You cannot be charged a penalty for paying your loan early. Not a single shilling. And if your lender has been charging you an early settlement fee, keep those receipts. That's now explicitly prohibited conduct. Now, here is what most people will never figure out about this framework. They'll read the headlines, they'll post about it, and then they'll do nothing. Because here is the uncomfortable truth. Rights that are not exercised do not exist. The framework exists. The language is there. The obligations are written. But the enforcement depends on you complaining, on you filing, on you asking for the key facts statement, on you saying out loud, I know my rights and I expect you to respect them. There is a direct line between how many Kenyans exercise these rights in 2026 and how aggressively regulators enforce them in 2027. The most powerful thing this framework does is not even the regulations themselves. It is the shift in power that it represents. Because for the very first time in Kenya's financial history, the 6 most powerful financial regulators have jointly published a document that says the consumer comes first. Not the consumer is important, not we care about consumers. They said it with standards, with principles, with enforcement mechanisms, and with interagency cooperation commitments. Now that is not nothing. The question is, are you going to read your rights or exercise them? Here's what you do in the next 30 days. I want you to share this video in your WhatsApp family group because they need this. Then secondly, the next time you apply for any financial product, ask for the key facts statement. Or third, if any lender contacts your family or friends about your debt, file a complaint with CBK. Subscribe for more breakdowns like this. I cover financial literacy, crypto, and entrepreneurship every week with the Kenyan market in focus. My name is Mumo. I'll see you in the next one.